Welcome to our guide on the basics of the stock market. Have you ever wondered what the stock market really is and why it's important? Today we're diving into this fascinating world, starting with the definition of the stock market itself. Simply put, the stock market is a collection of markets where stocks, or shares of ownership in businesses, are bought and sold. It's a vital part of the economy, acting as a barometer for the financial health of companies and entire nations. You might think the stock market is just for wealthy investors or financial experts, but that's a common misconception. In reality, the stock market offers opportunities for everyone to invest and grow their wealth over time. Another misconception is that investing in the stock market is akin to gambling. While it's true that there are risks involved, educated investing is based on research, trends, and data, not chance. By understanding how the stock market works, you can make informed decisions that minimize risks and maximize potential returns. Throughout this video, we'll demystify these concepts, making it easier for you to understand and engage with the stock market confidently. So stay with us as we explore the mechanics, types of stocks, and how you can start your own investment journey. Ready to continue learning? Let's dive deeper into how the stock market operates and its key players in the next segment. Welcome to the world of the stock market, a bustling marketplace where shares of companies are traded daily. Imagine it as a giant exchange where buyers and sellers meet, not in a physical space, but through virtual platforms. This is where the New York Stock Exchange and NASDAQ come into play, two of the most famous stock exchanges in the world, serving as hubs where trades are executed, connecting investors to the companies they believe in. But how exactly does this system work? It starts with buyers and sellers. Buyers are individuals or entities looking to purchase shares, hoping these investments will grow in value over time. Sellers, on the other hand, are those ready to part with their shares, perhaps cashing in on previous gains or reallocating their investments. Picture this: a young investor logs onto their trading app, eyeing a promising tech company. They place an order to buy shares, and within seconds, the transaction is matched with a seller willing to part with their shares at the agreed price. This seamless exchange is facilitated by stock exchanges, ensuring that trades are quick and efficient. The stock market thrives on this dynamic interaction between buyers and sellers, driven by factors like company performance, market trends, and economic indicators. Understanding these mechanics is crucial for any aspiring investor. As we delve deeper into the intricacies of stock trading, keep in mind that learning about these key players is your first step towards becoming a savvy investor. Next, we'll explore the various types of stocks you can invest in, broadening your financial horizon. Did you know there are different types of stocks? Let's explore the main categories you might encounter. First, we have common stocks, which represent ownership in a company and give shareholders voting rights. They're the most prevalent type of stock you might come across. Then there's preferred stock, which usually doesn't offer voting rights but provides a fixed dividend. This can be appealing to those looking for steady income. Beyond these, stocks can also be classified into categories like growth stocks, known for their potential to expand at an above-average rate compared to other companies. On the other hand, dividend stocks are attractive for their regular income payments, often favored by investors seeking stability. Understanding these distinctions is crucial, as they can impact your investment strategy and financial goals. As we continue, we'll dive into the benefits of investing in stocks, helping you see the potential paths your financial journey might take. Ready to explore how investing can be both rewarding and strategic? Let's delve into the next segment. Now that we understand the types of stocks available, let's explore why investing in them can be so beneficial. Imagine having the potential to grow your wealth significantly over time. That's one of the major advantages of investing in stocks. By purchasing shares, you're not just buying a piece of paper, you're buying ownership in a company. This means you have a stake in its success and can even receive a share of its profits through dividend income. It's like being part of something bigger while watching your investments grow. Investing in stocks offers an exciting opportunity to build your financial future while owning a slice of the companies you believe in. As we continue, remember that while the rewards can be great, understanding the risks is equally important. Next, we'll explore the risks involved and how you can navigate them to make informed decisions. Investing in the stock market can indeed be rewarding, but it's crucial to recognize the potential risks involved. Market volatility is a key factor that can lead to unpredictable shifts in stock prices, sometimes causing significant losses. It's like riding a roller coaster, with ups and downs that require a strong stomach and a cool head. Young investors should be aware that while the potential for growth is appealing, the possibility of losing money is always present. This is why informed investing is so important. Taking the time to research and understand the market can make all the difference. By learning about market trends and company performance, you can make more confident decisions. Remember, investing isn't just about the thrill of gains. It's about managing risks to protect your investments. As we delve deeper into this journey, let's explore how you can start your own investing path safely and wisely. Stay tuned as we guide you through the initial steps of entering the stock market with confidence. Ready to start investing? Here are some steps to help you begin your journey in the stock market. First, it's crucial to choose the right brokerage. Consider factors like fees, account minimums, and the types of investments they offer. Look for a brokerage that aligns with your investing style and goals. Next, set clear investment goals. Are you saving for a new car, a house, or perhaps retirement? Defining your objectives will guide your investment choices and help you stay focused. Remember, investing is a journey, not a sprint. Once you've set your goals, decide how much you want to invest. It's important to only invest what you can afford to lose, as the stock market can be unpredictable. Diversification is key. Spread your investments across different sectors and asset classes to manage risk effectively. Start small and gradually increase your investments as you become more confident. Keep learning along the way. Knowledge is power in the stock market. Finally, be patient and stay committed. The stock market can be volatile, but with a long-term perspective, you can navigate its ups and downs. By taking these steps, you'll be well on your way to becoming a confident investor. In our next segment, we'll explore common investing mistakes to avoid, helping you steer clear of potential pitfalls. Even the most experienced investors can fall into common traps. Let's uncover these pitfalls and learn how to steer clear of them. First, there's emotional investing. It's easy to let fear or excitement drive your decisions, but staying rational is key. Next, consider diversification. Putting all your money into one stock or sector can be risky. Spread your investments to balance potential gains and losses. Finally, never ignore research. Taking the time to understand a company's performance and the market trends can save you from costly mistakes. Remember, investing is a journey, not a sprint. Avoid these mistakes and you'll be on your way to making informed choices. As you continue exploring the stock market, keep these tips in mind to build a strong foundation for your financial future. Now, let's take the next step and see how you can embark on your financial journey with confidence. Congratulations on taking the first step towards financial literacy. You've just unlocked a world of opportunities. By understanding the basics of the stock market, you're setting the stage for a brighter financial future. But remember, this is just the beginning. Imagine the possibilities as you continue to learn and grow. Financial literacy is not just about investing, it's about making informed decisions that can lead to lifelong benefits. Whether it's planning for your education, starting a business, or simply securing your future, the knowledge you gain today will empower you tomorrow. So what's next? Keep exploring, keep asking questions, and never stop learning. Dive deeper into topics that pique your interest. Explore online courses, read books, or even join a community of like-minded individuals who share your passion for financial growth. We're here to support your journey every step of the way. Remember, every expert was once a beginner. By staying curious and committed, you're already ahead of the game. Take what you've learned today and make it a foundation for further exploration. The stock market is just one piece of the financial puzzle. There's so much more to discover, and we're excited to see where your journey leads you. So go ahead, take that next step. Your financial education journey begins now, and the future is yours to shape. keep exploring and learning, because the more you know, the more you can grow. Thank you for joining us on this adventure into the world of finance. Please like, share, subscribe to this channel, and don't forget to share your thoughts in the comment section.